Here.
Regent Rivera Forbes,
Here.
Regent Smerick,
Here.
Regent Speaks,
Here.
Regent Stebbins,
Present.
Regent Wood. He's here, I see him. Okay, and Chancellor Kerman is here, and we do have Vice Chancellors Herbst, Lawrence, Masucci, Sandler, Minor, and Wren, and Ms. Mulqueen, Perry is here, and AAG Boyle. Is Ms. Boyle here?
Present.
Oh, there you are. Great. Thank you. And so we do have a quorum.
All right. Good morning, everyone, and welcome. As we open the first meeting of 2026, I want to thank everyone joining us virtually today. While we always value the opportunity to gather in person, our decision to meet virtually serves two purposes. February meetings are often at the mercy of the weather, and it seems I was almost prophetic the storm arrived 2 weeks early. Second, as the system tightens its belt in response to challenging budgets, hosting one meeting virtually is a modest but meaningful cost-saving measure. It reflects our commitment to fiscal stewardship while continuing the important work before us. I want to congratulate and announce the board's officers for this calendar year. At the December meeting, the board elected officers for this calendar year. This year's officers are as follows: Chair Linda Gooden, Vice Chair Jeff Ganella, Secretary Andy Smerick, Treasurer Bill Wood, Secretary Yvette Lewis, Assistant Secretary Yvette Lewis, Assistant Treasurer Ellen Fish. I look forward to working together with each of you and appreciate your support. Legislative session is underway, and the weeks ahead will bring policy discussions and budget deliberations with meaningful implications for the system. Susan advised there are over 200 bills pending with implications for the system. I want to recognize Susan Lawrence, our presidents, and their state relations teams for their steady, thoughtful work in advancing policies that strengthen access, affordability, and academic excellence across our institutions. I have also had the pleasure of joining Chancellor Perman, Vice Chancellors Lawrence, Herbst, and Wren, along with their teams in Annapolis to support these efforts. While there are, of course, nuanced perspectives on a number of issues, I remain appreciative of the respect for and the continued support of higher education demonstrated by our elected officials. Since we are virtual today and not being hosted on a campus, we will not have our usual welcome from a campus president. That said, after public comment, the agenda will begin with the Education Forum, the Chancellor's Report, and reports from the advisory councils. It is now time for public comment, and Ms. Wilkerson will moderate the public session. Ms. Wilkerson?
Madam Chair, we have, of course, supporting public comment. We are supporting public comment in this virtual space, following our guidelines posted on the website. The agenda sets time aside for this purpose. We've got 3 requests for public comment, which will be read. They were submitted 48 hours in advance, and they sent their written comment in, which I will read in just a moment. All right, our first, the first individual is Amira Amujama, and she is a student at the University of Maryland College Park. She serves as the deputy liaison to the College Park City Council and represents student concerns related to governance and public accountability. She is going to speak on agenda item 4AI, the review of the USM Board of Regents policy work charge. And we'll begin her comments. When students enroll in the University System of Maryland, we are told that this institution prepares us to lead with integrity and integrity, innovation, and public responsibility. Many of us choose USM institutions because we believe those values. As you review and refine the workgroup charge governing board policy, I urge you to center transparency and ethical accountability within that framework. Students deserve clarity about how major institutional decisions are made, particularly those involving financial partnerships, procurement, and investment practices. Governance structures should not only ensure efficiency and compliance, but also reflect the moral and civic standards the university expects from its own students. For students like myself, those communities are directly affected by global conflicts, institutional financial ties to companies associated with violence or human rights concerns that are not abstract issues. They are deeply personal. At minimum, students deserve transparency regarding where tuition dollars and system funds are allocated. If this board is revisiting its policy framework, this is the moment to formalize stronger transparency standards and clearer ethical review mechanisms. Public institutions should not fear public disclosure. Good governance requires trust. Trust requires visibility. I urge the board as it reviews the workgroup charge to explicitly incorporate principles of transparency, ethical review, and meaningful stakeholder engagement into its governance policies. Thank you. The next comment is from Jasmine Alreyes. And Jasmine is an undergraduate at Towson University. She's the founder and president of the Students for Justice in Palestine chapter at Towson. She writes, I am speaking today under concerns that the newly formed USM work group considers our demands when revisiting the USM ESG policies on endowment investments. As a Palestinian Muslim student engaged in civic engagement on campus for the liberation of Palestine, it deeply affects me to know our system's endowment is being used to fund the genocide of my people rather than investing in opportunities in line with the values of Towson University and the USM claim to promote. This is unanimously unethical. As students, we object to this allocation of our system's endowment funds. We want our universities to reflect us, not fuel war machines that contribute to the mass deaths of Palestinian children, adults, and students just like us. Over a year ago, in response to concerns of oversight within the USM's ESG policies, the USM Foundation formed a subcommittee for inquiries relating to sustainable investing. Towson University, our SGA voted in favor of divesting from weapons manufacturers, and in accordance with the USM Foundation's newly formed process, this resolution was submitted by our SGA. A similar inquiry was sent on behalf of UMBC SGA that year. Disappointingly, the subcommittee decided to take no action on both. I am requesting that the subcommittee reevaluate this decision and honor the resolution brought forth by students in the SGA. As regents appointed to serve the USM student body, it is of great interest that the new policy work group does not choose to ignore the rising concerns students have surrounding endowment sustainability and its dire material consequences. And the final comment comes from Subi Raman. And Subi Raman is a student also at Towson University and is the co-president of Towson's Muslim Student Association. She writes, I am speaking today regarding the newly formed USM policy work group and the opportunity it presents to revisit ESG policies and endowment investment standards. As a student deeply involved in campus civic engagement and advocacy, it is painful to know that our system's endowment is being used to fund the genocide of Palestinian people rather than investing in opportunities in line with the values of Towson University and the USM claim to promote. Our universities speak often about equity, global responsibility, and ethical leadership. Yet when endowment funds are invested in companies whose products and contracts contribute to ongoing genocide, it creates a profound contradiction between the values the system promotes and the financial decisions made in your name. Students are stakeholders in the system. Our leadership shapes its future. Our names are tied to its reputation. We deserve transparency about where money is invested, and we deserve a voice when those investments conflict with human rights. Today, I'm asking this board to move beyond review and commit to a full divestment from military contractors, from military contracting companies more broadly. Divestment would demonstrate that the University System of Maryland refuses to profit from war and the suffering of civilians. This policy review is an opportunity to define what the system stands for. I hope you will choose a path that aligns our investments with the dignity and accountability and justice you claim to uphold. Madam Chair, that completes public comment.
Thank you. We will now begin with the educational forum. As an industry, higher education is navigating a challenging operating environment that has significant financial and policy implications, both now and for years to come. Rising costs, enrollment pressure, evolving policy landscapes, and uncertainty across several key areas are reshaping the sector. Institutions of every type are feeling these effects and must deliberate and strategize on how to respond. We're pleased to welcome our guests presenting today's educational forum on the higher education sector financial outlook. Michael Osborne and Emily Rames from Moody's Ratings and Jeremy Bass from PFM Financial Advisors. We look forward to their insights into a thoughtful discussion about the trends shaping our work and the strategies that will position our institutions for long-term strength and resilience.
All right, that must be our cue. Good morning.
Good morning and welcome.
Thank you very much. Thanks for having us. And I just want to double check. We were just let in the room, so I want to make sure my colleague and manager of our team is on.
I'm here. Can you hear
You
me?
are? Okay.
I'm here. Yep.
Okay, great. Great. Well, thank you for giving us the opportunity to provide some thoughts on the sector and then maybe delve a little deeper into the system itself. My name's Mike Osborne. I've been a part of the Moody's higher ed team for going on about 13 years. Spent some time in higher education directly prior to that, and I'm joined by Emily Rames, who manages our team.
Hi, everyone.
And
Hi, everyone. Yeah, my name is Emily Rames. I manage the higher education team. I've been at Moody's for 20 years.
so the way we'll go through this, I'll attempt to share my screen. It's been a while since I've shared a screen through Zoom, so bear with me, and we'll delve into some prepared remarks. But feel free to pepper in questions as we go if you'd like, or wait till the end. We'll leave that up to you.
Yep. So we have a few slides, and we'll start with kind of a little bit of an overview of how we view the higher education sector, and I'll take you through those. And then Mike will delve into your institution a little bit more. So Mike, I think if you turn to slide 3, I'll just get started. And again, if anybody has questions throughout, you can either just shout them out or try the hand raising. I'm not sure which will work better, but you could try either or both, or wait until the end. Okay, great.
Is the screen coming through clearly? Has everyone seen the content?
Yes.
Very
Great.
good.
Okay, so just a little bit on our sector outlook for the higher education sector. Our sector outlooks are really about overall business conditions and not about sort of outlooks on ratings. So that can be a little bit confusing to external people. It's a little bit sort of jargony for us, but we're not speaking about what we think ratings will do, but really about the external overall business conditions that the sector is operating within. So we said in December that the outlook for 2026 for higher education is negative, due mostly to demographic shifts that we're seeing, as well as federal policy uncertainty. You know, we believe that expenses for the sector will continue to grow faster than revenues, that federal policies continue to cause some operational and governance stress. We do note, however, that there are mitigants, there are strengths, balance sheets remain strong, governance remains strong. So, there is kind of a balance there. Mike, if you could turn to slide 4. Thank you. Some of the policies that we are watching that we think can affect the sector: federal research funding threats, reductions and caps to various federal loan and grant programs, expanded endowment tax, changes to the accreditation system, the environment for international students. Now, we've got all of these as kind of orange on this heat map, so all of them having potentially negative credit impacts with different levels of severities, and this is sector-wide. So within the sector, the level of severity would obviously be very different for the type of institution and the mitigants in the institution and that kind of thing. So various, but overall, this sort of contributes to the negative environment that we see overall for the sector. Great. So what we see actually hitting credit and ratings more than the federal policies really is the demographic changes. So what you can see here is the forecasts for changes in high school graduate growth and young adult populations by state. And what you can see here, it's a little bit small on my screen, but if you could see it, you see a lot in that sort of negative quadrant. You know, there are some in the positive quadrants also, but those in the negative quadrants were the forecast for declining numbers of high school graduates out for the next few years and declining numbers of sort of young adult working age. This is where we see that demographic challenge, particularly affecting this sector. Okay, great, thank you. So, but we see a lot of institutions focusing on risk management in this environment. Now, this takes many forms, including what we've seen, for example, shoring up liquidity. We've seen institutions issuing new lines of CP, larger programs of CP, lines of credit, taxable bonds. We've seen institutions institute hiring freezes, doing a lot of stress testing of potential changes and what they would do in those different environments. We've seen budget cuts. We've also seen a lot of planning for budget cuts, sort of identifying what could be cut in various scenarios. We've seen institutions moving ahead on capital projects to get ahead of possible changes to tax exemption, to get ahead of higher prices due to tariffs, et cetera. So generally, I think we have seen strong management in the sector as they have been sort of dealing with this environment. And these governance actions that we've seen and this sort of policy environment we've seen and overall sector are all part of kind of working within what we at Moody's have identified as the really major credit themes for 2026. These credit themes we see across all of global sectors, not just higher ed. So this is just sort of the global credit themes that we are looking at. So the lens that we are looking at things through, and we are seeing, as for 2026, political polarization, digital disruption, a shifting financial landscape, and costly natural disasters. Now, obviously, again, these don't affect all institutions. They don't affect all sectors in the same way. But these are the things that we think that if you kind of look at Moody's ratings and the rated universe overall for 2026, these are the things that are probably going to be driving many of the shifts, many of the things that we are talking about, the sort of the lens that we are looking through. And then this is the last slide that I'll touch on, ending on perhaps a slightly more positive note than the other slides I was looking at. This is our rated universe of higher education institutions. The point here is that higher ed remains really strong overall. Almost all investment grade ratings, largely in the AAA, AA, and A category. So while we spend a lot of time talking about and thinking about challenges, and that's sort of what we ask you about and talk about, generally overall, this is a very strong sector and overall a very highly rated sector. So that's all I have on sort of the sector overall. I don't see any hands raised. So I will turn it over to Mike now.
So before we do that, are there
Yes.
any questions for Emily from the board?
This is Bill Wood. I have a question for Emily.
Yes.
How do you factor in the shifting popularity or belief that higher education is the way to get ahead in life rather than going in another direction? We seem to get a lot of information about that shift in public opinion.
Yeah. So I think, you know, it's one of the challenges facing the sector. When you think about, you know, which are the types of institutions that are struggling the most, we tend to think about the small, private, four-year liberal arts colleges in the demographically challenged states as the schools that are really taking the brunt of a lot of the sort of negative things in the sector, including the demographic shifts, but also including the public perception issues and possible shifts. So I think that, we're seeing this a little bit of a shift in kind of the value proposition of higher education, right? People wondering, do I really need to go and get a 4-year college degree? Can I just go and get a job, or maybe go and get a vocational certificate and something that could lead me right to a job? This type of thing, there is this shift. So what we are seeing is that it is hitting the smaller private 4-year colleges, and actually a lot of the large public institutions are benefiting from this because they offer much better value. They offer things that they offer sort of similar things, but without the massive price tag.
Regent Fish?
One quick follow-up.
Yeah.
How significant is this shift in the demographics?
The shift in demographics is absolutely significant. I would say that when we think about, we've done a lot of rating downgrades over the last 5 to 10 years. It's largely been in the sector that I just talked about, those small privates in demographically challenged states. And there's a lot of things that are kind of piling onto them. The demographic challenge, I think, is probably the biggest and most significant because it is affecting enrollment. It is affecting their ability to grow their revenues. And when you put that at a time where expenses are high, it is really a significant challenge. So I think it is a very large challenge, and it will continue to be, because this is not a demographic shift that is expected to reverse. It is expected to continue. So it will continue to be, I think, really a driving challenge for the sector.
And I'll add just one quick note. Emily mentioned the smaller private colleges that may not have the brand recognition, the endowment to support to sort of relieve itself from reliance on student charges. But we do see it in some states with respect to the public universities, and I'll just speak to my home state of Michigan, where the demographics aren't favorable if you're looking to enroll 18-year-old, sort of your traditional 18-year-old freshman. And many of those universities in the state, of the 15 or so universities, 13 of them have lost significant enrollment over the last decade, even as far out as 15 years. I guess from a credit perspective, however, it's incredible when we think about the stability of their credit profile, and that's in large part because of management and some of the steps they've taken to right size and sort of acknowledge that we may not have 20,000 students anymore, we may have 12, and this is reality. And so it's a mindset shift, and if a new president comes in and they're thinking growth, and want to invest, it's maybe the opposite needs to occur, and you need to sort of be more prudent and disciplined. And so it's has a lot to do with how leadership responds and adjusts, and nothing wrong with an ambitious vision, but there's some realities that need to sort of be checked as well.
Yeah, I absolutely agree with what Mike said. A lot of the downgrades that we have done and seen are in large part due to those shifting demographics, but as Mike said, really about the response to them. Those that are getting out early in response to those and taking kind of the right actions, either right sizing or figuring out some niche program to grow and to bring in additional people. Those can work very well and can be fine. It's when we either see sort of head in the sand policies, that we can get back to the enrollment that we used to have, that often doesn't work, or just coming late to the game, like when we're hearing, oh, we've had declining enrollment for the last 8 years. We're thinking of a solution now. That's often not good. It's maybe too late. So that's kind of where we're seeing the downgrade. It's a combination of those external factors and the governance reactions. I see a bunch of hands up. I don't know what the order was, but
Well, I do.
Okay.
Regent Fish?
Yes, thank you. Can you speak to, as you look out at the sector, the impact of AI?
Not terribly well. So what we know is that it's going to have a huge impact on the sector. There's a lot of discussion about AI at the student level and what it's going to mean for learning and how professors can react to it and use it properly and make sure it's not used improperly. We're hearing from a lot of universities about their use of AI to bring efficiencies, sort of to back office things and billing and hiring and HR. And what we're hearing from most is that they are at early stages of that. They are investing in it, but and think that it will bring significant efficiencies and gains, but it's early days yet to sort of quantify that. I think there's probably a lot to learn over the next few years about in which ways AI is going to dramatically shift the jobs that we need and the jobs that we don't need anymore, and how colleges and universities adjust to that. I mean, the example that I keep thinking of in the top of my head is not going to need as many computer programmers. And a lot of schools have large computer programming departments and majors, and they've invested in that heavily. That's probably going to have to shift. So, I think we're at the very early stages of that, but I think it is going to change both the way colleges operate and what they offer. And those that are really sort of leaping into that and staying ahead of that are probably going to see more success with that.
Yeah, I guess from
Emily, go ahead.
Oh, I was just going to say that I haven't seen or heard of curriculum sort of revamps yet and elimination of degree programs and so on. But it seems like the first response I've heard or continue to hear is just maybe the introduction of some content around the sort of the ethical and responsible use of artificial intelligence. And so let's start there before we sort of go any further, and let's educate young folks and what the implications are and how do we deal with it in real time. Then let's take a step further.
The impact on degrees is going to be significant, especially to your point, especially when you look at the programming type of degrees.
I think so
computer
too.
science.
Long term, yeah. Maybe even near term.
Near term.
Regent Lewis.
Good morning. Did you look at HBCUs in the context of everything that you presented to us today, and where do they fit?
Yeah, we have looked at them. We've written a couple of research pieces on them in the last couple of years that we'd be happy to send you. One thing that we have seen is that in the last several years, the most sort of prestigious of them have actually benefited in enrollment and are doing quite well, and probably in part to the Supreme Court decision that got rid of affirmative action. You've seen maybe more of a sort of a funnel there. So the stronger HBCUs are actually doing well with enrollment. They are seeing enrollment increases. They are seeing application increases. The sort of lower rated and weaker of the HBCUs are probably more in the bucket of just sort of like the other colleges that are maybe struggling a little more with enrollment.
Regent McMillan.
One of the things that I was noticing on your risk factors, which I think is really quite notable, is that, the accelerating federal debt. I mean, it's estimated to be in a decade, $64 trillion, $2 trillion of interest. I mean, that's going to affect, obviously, federal research, federal Pell Grants, all the different things that the federal government supports. Is that in your calculations, or how do you factor that fiscal cliff that we're facing?
Yeah, I guess we haven't thought about it so much as the federal fiscal cliff having some sort of direct line into the university credit. The way that we've thought about it is that federal support through research grants and other lines have been kind of a given for the sector for decades. And that what we are seeing now is that things maybe are not so much of a given. I mean, if you think about just the changes that were made last year to the accreditation system, sort of the upheaval in the federal administration in the view towards higher ed, and as you speak about the potential for, we changed our rating on the US government last year, in large part because of this large and increasing amount of debt. All of these things, I think, make for a federal partner that out in the future is maybe not what it used to be, not the steady hand and partner that it used to be.
Thank you.
Well, I think that wraps up the
I see one more hand.
Oh, Michelle?
Yes, good morning. In your analysis, did you consider online institutions and how they're impacted in this new order?
Yes, we think about online institutions a lot. When we talk to institutions, we often ask them about, to what extent they have online students and their strategies in it going forward. Obviously, during the pandemic, there was sort of a huge shift this way. And a number of institutions have really capitalized on that and grown that and made that sort of a significant piece. Others have smaller pieces in the sort of online world. I think that it offers, it offers a way of sort of diversifying the student base, of getting students who maybe you wouldn't otherwise get. So there can be a benefit there. It's really a matter of each individual's institution's sort of mission and goal is, what is it that they want to do, and the online option, if it sort of fits into that well, it can be a very good piece of it.
So you don't see sort of a natural growth in that area. It's really the institution making the decision whether it wants to go after that.
We saw a huge growth during and then sort of immediately after the pandemic. I think that in the last couple of years, we're not seeing huge additional growth in online, but over the next several years, we may see more or less kind of focus on it, some pulling back a little bit and some growing into it more.
Right. I think where I haven't seen online be, if you're coming at it from the perspective of, campus-based enrollment's down, we think enrollment's the way forward. It's going to, sort of increase our top line and maybe bottom line. It's going to, help us. That hasn't really been the case. And, we've certainly observed that scale matters in that space. Where I think it's beneficial, where I hear the most benefit is more like where there's space constraints, and where large public universities are using it as a tool to free up classroom space and be more efficient with offerings and get students out on time. That's where I think the added benefits are, at least today. But haven't seen it sort of replace campus-based enrollment or even the demand for it.
Regent Ganella?
Morning. This may be too broad a question, and it may be too difficult to answer. And if that's the case, no worries. But I'm just curious, as we look at all this data holistically, are there any conclusions that we can draw about how the higher education sector has compared to other sectors? Meaning that the challenges that you outlined in talking about a little bit of the regression or downgrading are broad to all industries. And then we talked about how the higher education sector is still very strong. So I'm just curious, if we're thinking about this more broadly, how does the higher education sector compare to a number of other sectors from your perspective, from a rating standpoint?
Yeah, sure. I'll take a stab at this. I'm not sure if this is exactly going to be answering your question, but when we assign an outlook to the higher education sector, throughout Moody's, we are assigning outlooks to all of the sectors that we rate. So that's one way of kind of looking at it. So we have a negative outlook on the higher education sector. Within our public finance department, we also have a negative outlook on the K to 12 education sector. And that is in large part also due to these demographic shifts that we are talking about. We have stable outlooks on the healthcare, the nonprofit healthcare sector, which is kind of interesting because that sector was so dramatically hit in the pandemic. We had a negative outlook on that sector for several years, but that's gone to a stable outlook. We have a stable outlook on cities and counties in the US. We have a stable outlook on states. We have a stable outlook on housing. Within our infrastructure teams, we do have a negative outlook on ports, in large part due to sort of tariff and trade issues, but a stable outlook on several of the other infrastructures. So kind of within the US and the public finance world, I would say there is a view that there is a sort of a more negative, where there's a more negative environment for higher education than there is for a lot of other sectors. And just to speak to that, I was at a conference yesterday, the Bond Buyer National Outlook Conference. There were several panels at which people said, higher education is the sector that's in trouble right now. So I was sitting there as sort of the Moody's higher education representative, hearing lots of people, investors and bankers and everyone talking about throughout the sectors, higher education is one that is the most stressed at this time. So I don't know if that's exactly the.
Yes, thank you very much.
Yeah.
Very helpful.
Yeah, Regent Hassan.
Yeah, one of the things which is happening recently, the ICE situation, is that being considered, evaluated, how that is impacting people not going to the colleges, universities, or schools?
Yep. Yes. So I've learned in the last few days that one of the colleges in Minneapolis had to close for an entire week because it's located just a few blocks away from where one of the murders of one of the protesters occurred. So, that can be an impact right there. There's probably increased costs for student safety. So the schools in the areas are paying more for sort of safety of students in the area. And they may be, some of them are offering online. So some of the schools in the Minneapolis area are telling their students, if you don't want to come to class, you can do these classes online. So it's definitely an issue. Generally, as when you looked at that scale of our ratings for higher education being generally a highly rated sector, these are sort of near-term and shorter events that can definitely be absorbed by colleges with significant balance sheets and large amounts of potential wealth or sort of donor support and that kind of thing, large liquidity. So I think that we don't expect to see rating downgrades or anything like that because of this at this time, but it is definitely something that we're talking to those institutions about because they are having to shift they're having to shift some of their models, their operations, their costs because of it.
Right. And just like kind of how we think about constantly evolving federal policy, that it's another, I'll say the word distraction and taking leaders away from and faculty away from sort of executing their mission. And so that can't be lost either.
So Emily, as you considered all of this data, it appears to be focused on your 18-year-old traditional students. Are you starting to observe any offsets associated with the need for new skills or reskilling and non-traditional students coming back to school to get retooled? Is that an area that you've looked at to see if there are some offsets to these demographic cliffs you presented?
Yeah, I mean, I don't think that they necessarily offset the demographic cliff. I think the demographic cliff sort of is what it is. There in the reconciliation bill that was passed last year, there was some shift towards sort of vocational education and potential loans for that. There is, as we talked about, the sort of perception of higher education, I think that there is room and space for community colleges to pick up some students who maybe otherwise wouldn't be thinking about a four-year education, or wouldn't be thinking about necessarily a license or a certificate and may do that now. So there are opportunities. There are also opportunities, I think, for colleges and universities to bring some of those students in to start some of those types of more certificate and degree programs and licensing programs. So there are definitely some opportunities there. I don't think that they really offset fully offset the demographic cliff, which kind of is just, there will just be fewer students overall.
Okay. All right, we're going to focus on Maryland now.
And are we okay on time? I'm not sure how much time you allotted for us, but just want to be mindful of your schedules.
We're good.
Okay, very good. And so, I guess I'll begin. Just the upshot is that despite many of the challenges we just cited, and those challenges will persist, that we think the University System of Maryland is positioned quite well. Not only positioned well, but managing well through a very challenging operating environment. A colleague of mine just concluded a review of the AA1 credit rating, which, as you can see from that scale that Emily spoke to, is a very high rating and rarefied air. Good company with many of your Big Ten peers. And Meredith, who led that review, she and I had the opportunity to visit with some senior leaders on campus. And so it was a nice visit and a great tour of the College Park campus. The credit opinion was published just last week, and if you had a chance to take a look at it, I think at a AA1 rating and stable outlook, it should reflect mostly sort of positive tone and strength, but that doesn't come without challenges. And our strengths and challenges we try to sort of rank order them in terms of most prominent to sort of least, I don't say least prominent, but just order of magnitude, we'll say. And it's very hard to ignore the sheer size and scale, breadth of offerings of the system. That with over $7 billion in operating revenue and almost 130,000 FTE students, you're one of the largest systems in the country by FTE, by revenue. And as you'll see a little later, there are very few universities with this kind of scale absent the inclusion of a large academic medical center, where some have them more sort of on a consolidated basis. And so just the sheer amount of scale buys, I think, a lot of credibility, a lot of flexibility. We view that as that would give management some levers to pull in sort of tighter fiscal environments, that there's some economies of scale to leverage. And so that's going to probably always hold the number one strength in our credit opinions here. Can't ignore the support from the state. Moody's did downgrade the state, I believe it was last year, from a AAA to a AA1, but that didn't really come at the expense, at least as far as we view it. You're more sort of intimate with those conversations with the state, but that support is flowing through, both from an operations perspective and also from a capital perspective. And there are many peers of yours across the Big Ten and across the country that would love to have that kind of dual support, that capital support, as well as the operation, the support for the budget. And so that's and that even in of itself is becoming more rare these days, that states have the ability to support on that kind of dual mandate. The research profile, as when we visited, we learned that just learned about some of the uniquenesses of the research, the breadth of research, the funding sources, the support from the state, but also the federal support, and and in disciplines that in this environment you could see it not being maybe as at risk as some other areas of research. And so some uniquenesses there that should persist, and in terms of funding and attracting additional funding going forward. And that support from the state and good fundraising and just having diverse sources of funding for your capital needs has led to a good leverage profile. What we would call sort of direct debt, that bonded debt you have on your balance sheet holds up very well against the cash flow you generate, against the wealth across the system and the foundations. From a sort of direct debt profile, it's incredibly strong. And that comes through in debt service coverage and other ways, but that it's a very well managed leverage profile, prudent use of debt, and it really shines relative to peers. On the challenges side, I'd say the fundraising is very good here. If we're thinking about the next step up, if we're thinking AAAs, there's some room for growth, I guess, when you think about some of the fundraising captured at many of the AAAs, but don't want to discount that at all. I think one of the differences between some of the AAAs and the University System of Maryland is that the systemness kind of dilutes some of the philanthropy on a per student basis. And so that's sort of called out here. Like most public universities and systems, there are going to be some limitations, whether it's regulatory or statutory or political, but going to be constraints on leveraging pricing power where it exists. And we can understand that there's always that trade-off between state funding and tuition increases and affordability and just sort of all those competing mandates that you want to meet and how you support students in the state, but that's not unique to the system. We highlighted the demographics and sort of student demand constraints, that's a challenging environment, that the ability to pull nationally is just getting more and more competitive as other states do things to sort of shore up their public universities, keep them affordable, keep their students in state, that it will become increasingly more difficult to recruit across the country. Then, of course, internationally, we're well aware of some of those constraints today. The way we look at debt, we look at it from what we call total adjusted debt, and that includes things like public-private partnerships, but it also includes pensions. And so we do want to acknowledge that there is a rather sizable net pension liability. Again, that's not unique to you all, but that exists, and it is part of your expense base, and will continue to be part of your sort of leverage mix. Moving on here, so in that credit write-up, we want to acknowledge what would drive the rating up? How would we get to the AAA? What could lead to a downgrade of the rating? And I would say that these aren't, you wouldn't have to sort of meet all of these to move up to a AAA. We want to make these sort of realistic in nature. We don't want to say like, oh, if you raise $5 billion next year, then there you go. Obviously, we want to, that would be nice, but want to also be realistic in our assessment here. And I think there's been a little bit of operating performance or margin erosion. If we saw those margins sort of pump up a little bit to the low to mid teens, that would be nice, and only nice because what it would do is allow you to sort of retain more of that cash flow on the balance sheet, which kind of leads to the second point, which is sort of growth and unrestricted reserves, building greater financial flexibility, more liquidity to support the system in times of uncertainty, fiscal stress, some shocks, some unknowns. And that would bode well for credit momentum, to the upside. Just kind of mentioned that before, but that ongoing sort of strengthening of brand in terms of consistent growth in net student charges. I think you're doing that already, but we'd want to kind of continue to see that momentum going forward. Breadth of donor support, continue to grow the research profile and sustain that revenue mix that you have. So it's more of a sort of a maintenance of, statement here. To the downside, sort of, I don't want to say, well, the opposite of everything we just said for the upside, but the first one kind of does speak to that a deterioration in operating performance, the ability to service your debt in a healthy way, to maintain, inability to sort of maintain and grow reserves that could be a credit stress. We would want to see continuation of that state support, any degradation in state support, either on the capital front or operations could lead to downside risk. And that would inform the third bullet, which is really changes in the capital funding strategy. If you had to sort of go at it alone, for example, lever up on the debt side because the state's becoming less supportive or donors aren't stepping up, that could lead to downside risk. So here's a snapshot of our scorecard, and our scorecard is a point in time. It's quantitative. It doesn't have feelings. It's looking at the data in a fiscal year. And while it doesn't have feelings, while it is quantitative, it does like certain things. And one of those is scale. And so just wanted to highlight the very first row here, if you can, I don't know if you can see my cursor here, but just adjusted operating revenue scores out to a AAA. Want to call out the wealth AAA. And so it's not just AAA, but if you were to look at the cutoff between, say, a AA1 and a AAA, this really leaps into the AAA in a big way. And so it really does give us fuel to support a AA1 rating when the scorecard indicated outcome is AA2. And so while the scorecard has its weights, we may analytically choose to sort of give more weight to certain items just based on sort of the our understanding of the importance of the system, its role in the state, the economic benefits that it delivers, and we might choose to elevate the rating. Also, we understand that margins can go up and down, and so this particular scorecard doesn't like the 7% so much, and we've seen stronger years, but not one year does a trend make, and so we want to acknowledge that. And then lastly here, and if I don't want to walk through every metric here, but what I tried to do is show, and if you can see here, about in the middle here in bold type, University System of Maryland, some key metrics that we look at. This is not an exhaustive list by any means, but a few of the key ones. And if you look over here, these 5 columns represent revenue mix. And like I said earlier, I just want to kind of call this out. The operating revenue of 7.1 billion in the context of revenue mix, this is pretty impressive. It just highlights the sheer scale, the significance of what you're doing in terms of educating students and the research that you perform. That these other universities and systems their scale is being driven in large part by their healthcare exposure, and you could argue that's a risk, and we acknowledge that that's a risk and could drive deterioration of margins much faster than for a system that's not reliant on that. And so that is a nice anchor point. But I guess if you can see where the strengths are from a metric standpoint. If I were to just look at, I'll just call out a couple rows here, but well, we look at total cash and investments. We think about all the wealth at the system. We think about the foundation wealth. All of that gets captured. And relative to the expense base, just under 1 times coverage. It holds up nicely in the AA1 category, but you can see that it is a little lighter than the AAAs, for example. So if you're thinking about, well, what does it take? Total cash and investments to that total adjusted debt measure that I highlighted. Again, a little lighter relative to some of these AAAs. And so just wanted to call that out, but positioned very strongly very well in the AA1 category. And hopefully our credit opinion reflects that when you read it. That's all I have for prepared remarks, but happy to take any questions.
Just out of curiosity, the government appropriations column, tell me what your definition of that is.
This should be, and it's not always perfect. It's sometimes there can be a lot of noise in the appropriation line, but this should include all state appropriations for operations only. For the budget, not for capital. We would capture that below the line.
Okay.
Mhm.
I have a technical question.
Yes.
What, can you explain the difference between AA1 and AA2?
Yeah, very little. Very little difference, subtle differences. I think what you're going to see in the AA2 category is maybe a little, you're going to see a little less, generally a little less scale. Now, this is not looking at every AA2 and it's not looking at every AA1, but you're going to see a little less scale, uh, with the exception of University of California, but which is a monster, but a little less scale, sometimes a little less. I guess I don't want to say brand strength, but we'll say sort of breadth of enrollment, diversity, and the ability to attract students nationwide. That you could see a little sort of less ability. They may be very strong within their state, within their region, but not attracting sort of a broader mix of students. You will, in many cases, you will see. Universities in the AA2 category, if they're, and we didn't talk about this earlier, but if their state rating is, let's say, a AA2 or a AA1, it's hard to pierce the state rating for a public university. And so I can think of one case in our public university portfolio where the university is rated higher than its state. And that would be the University of Michigan, which is AAA, and the state's rated AA1. And so some of these universities are going to be a little tethered to their state rating as well.
And in case you're asking a much more basic question, our AAA rating is our highest rating. And then we go AA1, where AA1 is the highest, AA2 is the middle, and AA3 is the lowest. And then we go down to the A's, where A1 is the highest, A2 is the middle, and A3 is the lowest, and on down.
Oh, you wanted that answer, not the analytical answer, but the
I don't know. I don't know. I thought we'd give both answers.
Both answers were great.
Thanks.
Regent Hassan.
Yeah, I have a question. When I look at the Ohio State University on this chart and look at the $8,000 or $9,000 approximately, the state appropriation, 61,000 students, how do they get? I mean, it's like $500 million you're getting from the state. Where's the remaining operating revenue coming from?
So where's my mouse here? If you scroll to the very right column here, far right, patient care revenue, this would be the hospital. 60% of their revenue here is coming from their health system. And that's significant. We see growth across academic medical centers. Scale matters. There's a lot of consolidation taking place still in that space. They're no exception, but the bulk of that's coming from their healthcare operations.
Not tuition, right?
Correct.
Okay.
Tuition here is 14.5%.
Okay.
In auxiliaries, student housing, other things.
Hey, any other question for our guests? Well, seeing no other questions, I want to thank you for your presentation. You can tell by all of the questions that people listened with great interest. And I gathered from your presentation that the big thing in these times of uncertainty is management. And we certainly have a great leadership team that operates all of our schools. And so we appreciate your comments very much. And thank you for being here this morning.
Thank you for your time.
Thank you for having us.
This is fun for us.
Yep. Thanks. Have a good weekend.
You too.
Thank you.
Now we'll move on to the Chancellor's report. Turn it over to Chancellor Perman.
Thank you, Madam Chair. Good morning, everyone. Colleagues, given today's virtual meeting, I thought I'd spare you a 30-minute report, during which you have only my face to look at. And so I am, in all seriousness, going to abridge this report to just a few topics. I do hope you will read my full written report. It's in your board materials. I can tell you that my reports are really a testament to the powerful work that is taking place across the system. And I believe the people who are doing that work care that you as Regents know about it. Thank you for letting me say that. Before turning to the governor's FY '27 budget and an update on our research enterprise, I want to begin with one achievement. All the other achievements are in the written report. And this achievement is shared by multiple of our universities. And it's one that I know is a significant priority for this board and for the system as a whole. Last year, 7 University System of Maryland universities applied for the 2026 Carnegie classification for community engagement. That's the most coveted endorsement of a college's work to advance the public good. All 7 of our universities that applied won the distinction. Salisbury, Towson, UBalt, UMB, UMBC, College Park, UMES. The system's success on this rigorous test of community engagement, which I talk a lot about with our leaders and the public, it's frankly rare and remarkable. Please understand that our universities that applied, all of them who got the rating, joined just 232 schools across the country. And you know, there are about 4,000 or more, public and private, in earning that designation. It's a credit to our university's commitment to making meaningful, measurable change through community engaged teaching, research, and service. And this commitment aligns with our strategic plan, in which we pledge to integrate civic education, engagement throughout our curricula, and to support university-based practices that build a civic engagement infrastructure across the system. Seems to me that a foundational purpose of American higher education, especially public higher education, is to use what we have, what we're blessed with, our knowledge, our assets, our influence in the service of enriching our communities, and to educate our students for the obligations of our democracy and to solve, together with our neighbors, the greatest challenges we face them together. I need to thank the Regents who have prioritized and supported this essential work. Now let me pivot to Annapolis. You just heard a great deal about the importance of state support, where I, together with colleague presidents, our vice chancellors, have been working very hard and testifying in support of the governor's budget proposal for the system. $2.3 billion in state support was included in the governor's budget. That is a 0.6% increase over last year's budget. So, yes, we always wish it were more, but clearly the governor recognizes the impact of the cuts we've suffered over the last 2 years, cuts totaling 10% of our state appropriations, and he's responded with a proposal that keeps our budget whole. But that said, the proposal does shrink our personnel line by over $29 million, 1.5%, through a reduction of budgeted vacancies. And so our universities will review their vacant positions to determine which can be cut and which simply cannot. We'll continue our efforts to save costs, but given successive years of budget cuts, yes, those savings are harder to find. I think, though, that this proposal is proof that the governor has heard our pleas to protect our people, the people that make this system what it is. And we're grateful for that. But it's not the only thing we're grateful for. A level budget actually belies some significant investments. Governor Moore is delivering on his promise to make Maryland the capital of quantum and to steer investment to College Park, ground zero for Maryland's quantum ambitions. In all, $14 million goes to the University of Maryland for quantum innovation. A total of $32.5 million in new funding goes to Bowie State, Coppin State, and UMES. That's the fifth installment of the HBCU settlement. The budget proposal includes funding for a 1.5% COLA for USM employees, and this pay raise is critical, given that salaries still struggle to keep pace with inflation. But the system will again have to absorb that increase for employees not covered by state funds. And that is at least $25 million next year. The governor's budget sustains the state's investment in the Empower Alliance, of which we are all proud. Between College Park and UMB, $1.5 million is allocated there. I do want to mention at this point that the new National Science Foundation's rankings of annual research expenditures show the following as we talk about Empower. UMB and College Park together rank in terms of research expenditures among all U.S. universities. They rank number 14, all public and private, number 14, number 9 among publics, top 10. Now, these rankings reflect FY24, when federal research investments were frankly more robust, more aligned with our activity. So given that, and given what's happened, and I'll come to an update in a moment, we're particularly grateful for the governor's proposal to support research across the system. The $25 million he's earmarked will help us sustain critical research in areas that have been deprioritized by the federal administration and help our institutions to pivot to projects more likely to win funding. So I do want to update you on the federal research landscape and to note for a change what seems to be a positive development, namely a gathering will in the courts and in Congress to act as a backstop against the administration's most damaging cuts. But I can't talk about the good news without first acknowledging the bad, the harm our research enterprise has suffered over the past year. And we've been keeping you updated about these. Stop work orders, rescoped awards, new compliance requirements. All of this has created uncertainty in the research space and ballooned the time and money we spend in research administration and in grant review and in defense and in litigation. Particularly hurt are the research areas that the federal administration considers out of alignment with its priorities. You know them: DEI, environmental justice, global health, health equity. These are areas in which the University System of Maryland and its institutions have special strength. So here's the scorecard as we know it. Since January 2025, 1 year ago, our universities have had 219 awards canceled. That's $133 million. NIH awards suffered the most, 51 million in grants canceled, followed by the Department of Education at 19 million and the NSF at 14 million. Given the damaging hit to the NIH, it's unsurprising that UMB has absorbed the heaviest losses at 50 million, followed by College Park at 33 million, UMBC at 21 million. But I need to make clear to all of you that every single one of our universities has had grants canceled. Aside from current losses, we've seen a marked slowdown in new award activity. Over the last year, the two biggest agency funders, the NIH, the NSF, have made fewer grants in every area of science and medicine. Now, that said, Congress has recently passed appropriation bills that reject the administration's deepest cuts to U.S. science agencies and restore budgets capable of advancing health, safety, and scientific innovation. Again, not as much as we would argue for, but more in the correct direction. And these bills do more than restore agency funding. They prohibit deviation from negotiated reimbursement rates for indirect research costs, the overhead costs that we've been telling you about. Those earlier proposals to slash these rates to 15% would, plain and simple, have devastated our research enterprise. Look, real risks remain. There will be lasting impacts for deprioritized research programs that are not going to be reinstated, even if prior year funding levels resume. But we're more optimistic than we have been about our ability to weather this storm. Our earlier worst case projections, you know the number we used, a loss of up to $300 million over 2 years, and that's the way it looked, could shrink. That number could shrink with new congressional action to protect university R&D, and with it, frankly, in my view, our nation's longstanding scientific leadership. That's encouraging because it's not only our universities that suffer when they're starved of research dollars, it's our people. I'm talking about the people in the USM family, from graduate trainees all the way to established faculty who make these research programs run and deliver. And as important, maybe more important, it's the citizens and communities that our research serves. So look, we're doing the work to assert our leadership in the nation's most critical R&D. Those rankings mean something. We're aligning our research strengths and assets with federal priorities. We understand. We look at the priorities. We can adjust, and we are. We're growing new research opportunities, cultivating new sponsors, public and private. I think Vice Chancellor Masucci will give you an update at the April board meeting about deliberate actions we have taken and relationships we've built collectively. to attract research support in dollars for our research efforts. And as you've heard and you've approved, we're investing our own money in protecting core research activities while, as I said, exploiting new areas of inquiry. We're investing in grant development and research administration to provide the oomph for this. And as I keep emphasizing, we're supporting the people who make our research programs among the best in the world. We're built for this, and we look forward to updating you on where our strength and our spirit and work and innovation take us. Madam Chair, this concludes my report. Thank you.
Thank you, Chancellor. Does anyone have any questions for the Chancellor before we move on to our council reports? Seeing none, we'll move on to the Council of University System Faculty, Dr. King White.
Thank you, Madam Chair. Today I'll be reporting abridged versions of what we accomplished on the Council of University System faculty in December and January. Although we have had our February meeting, I'll withhold our work on that for the April board meeting. Before I get a little bit more serious, I just wanted to take a moment to share with great pride that Towson University alum Brian Duker just took an NFL role as defensive coordinator of the New York Jets a few weeks ago. President Ginsburg, not only is he a Tiger, but he was one of the best students we've ever had graduate from the program I teach in. It's the Jets, but it's still an NFL job. So we've
That
kept
just
up.
means he has room to grow.
Yes.
The program, right?
Absolutely. We've kept in touch. He graduated in 2010. We've kept in touch on and off as he's moved forward in his career. It's been neat to look back at our messages and see how much he's grown and achieved since graduation. And it's with my youngest health challenges right now. It's these glimmers of success that sort of help show that these things are all worth it. That doing these meetings and taking on leadership roles can be important, whether that be educating the next NFL football coach or a doctor that can make imperative medical advances, speech pathologists and special educators who can help future generations learn and positively contribute to Maryland and the greater society as citizens.
Well, congratulations to you and to the student.
Yes, thank you. As Chancellor Perman pointed out, with legislative session upon us, I definitely encourage everyone invested in the USM to represent us well, continue doing the great work that you're doing. And I wanted to certainly highlight the work that Roy, my colleague in Cuss, and Jefferson, the students, have put in terms of efforts in organizing our role for Advocacy Day next week. So thank you, Roy and Jefferson. All right, now for like the nuts and bolts. We met December 10th and 21st, December 10th, 2025 and January 21st, 2026. And a couple highlights from those meetings are as follows. In December, we met at Coppin State University. President Anthony Jenkins and Senate Chair Dr. John Hudgens came and joined us. It was well received, and we're very thankful for their efforts and time. They described the leadership vision and accomplishments that have taken place on campus over the past few years, as well as some of the challenges and cooperative compromises the faculty and administration have made during that time. Vice Chancellor Rinn and I, you'll see a common theme with this, made strong requests for productive Advocacy Day representation from the faculty. Our Faculty Concerns Chair detailed results of campus safety survey that they ran and stated that the committee would be working on a white paper in light of the information they have. there may be some further study to break it down into individual campuses, but right now they want to look at the broad system concerns that came out from what they have, from the data they have. Legislative Affairs Chairperson Holly Brewer discussed how the conversation with Vice Chancellor Boyle, Allison Boyle, and how she shed light on the final C7 provisions, and faculty were generally satisfied with having the meeting and the feedback. Two resolutions passed in December, one in support of collective bargaining for faculty and the other in support of collective bargaining for graduate students. In January, when we met, Vice Chancellor Wren and myself again reiterated Advocacy Day being very important. I also shared that I wouldn't be there, but that our Vice Chairperson, Maida Finch, would no doubt represent CUSIF leadership capably next week. Beyond Advocacy Day, we also discussed our Executive Committee voting procedure that is set to begin in March and hopefully conclude in April. That way, home campuses will know who leadership on CUSIF is, as that may affect voting roles and things like that. And we discussed and came to a consensus that hearing from various campus leaders, inspired by some of the experiences we've had with President Pines and Ginsburg and Jenkins. I'm trying to, if I left someone out who's attended CUSIF in the last couple of years, I apologize. But the CUSIF body really has enjoyed that, hearing your vision and some of the challenges. So we reached out to a few others, noting that it's a little late in the game this year to be asking for that, but it's something on the horizon for next year. And today, I would like to thank President Lupre from Salisbury, who's kindly agreed to speak with us for a few minutes in April. And I will attempt to have their Faculty Senate Chair join us as well. All right, very quickly, committee accomplishments. Our awards committee did their hard work over November and December and forwarded the names of their nominees to the board. I'd like to point out Lorenda Naylor's excellent leadership in that position. Education policy, led by Dr. Mary Crowley at UMGC, reported that it finished its review and revision work on the proposed policy on professional conduct and workplace bullying. They shared it with faculty concerns, and they hope to have it back in time for full council review in February, which they did, and final action in support at our March meeting. Faculty Affairs has worked with Ed Paul and Legislative Affairs very productively this year, but on their own, led by Dr. Doris Santamaria McCang from Frostburg. They completed their work on reviewing the USM bullying policy and also are looking at the campus safety issues and issues with mental health. And they held a meeting in February to discuss their agenda for tasks in the spring semester. So they continue to be productive. I'd like to take a moment to thank Dr. Holly Brewer for her leadership in working with Roy and the rest of the team planning for Advocacy Day, and are looking at putting together a resolution supporting shared governance moving forward. On the research committee, led by Dr. Miroslav Janowski from the University of Maryland, Baltimore, they recognize that some faculty on campuses are concerned about the draft AI policy, in the sense that they would just like some of their experiences to be heard at some point, and they're working on ways to put that together so that we can get a message out in an official capacity. And finally, our Rules and Membership Committee, led by our chairperson of that committee, Maida Finch from Salisbury, has identified 3 tasks they will work on for the remainder of the spring. Largely, this will focus on establishing a clear process for executive committee nominations and elections in a virtual space. They're going to work on a process for virtual meetings and how to have multiple voices being heard so that we can have kind of a formalized system with that. And they'll begin revising bylaws or looking at revising bylaws, particularly around retired faculty and as they progress towards emeritus status, what that can look like. And that way it's sort of set in place that this is just kind of how we do things. I look forward to updating you as we develop CUSIP's priorities for the remainder of this academic year and continue to work cooperatively with the USM and the Board of Regents moving forward. So thank you, Chair Gooden.
Thank you for an excellent report. Do we have any questions? Okay, hearing none, we'll move to the Council of University System Staff. Mr. Prouty.
Good morning, Chair Gooden, Chancellor Perman, Regents, Presidents, and all others in attendance. I've got to say, I look forward to that short walk to the podium to sort of steel myself before these reports. And I'll have to ask for your grace a little bit because I'm getting a little bit of a cough. I might need to go on mute to clear my throat a few times. So sorry about that. The Council of University Systems Staff met most recently on January 13th at the University of Maryland, Baltimore. At this meeting, we discussed the then impending start of the 2026 Maryland legislative session and its implications for the system, as well as a brief review of the draft policies addressing paid family medical leave. We also discussed the current system policy governing tuition remission for system employees and generated a new ad hoc committee to review the program exemption procedures for tuition remission. I'd like to thank UMB Provost Ward and the System Vice Chancellor Susan Lawrence for joining us at our meeting and sharing their insights and expertise. As far as formal meetings go, we'll be next meeting on Tuesday, March 10th. This meeting will be held virtually but hosted by UMCs. Our February meeting will be replaced by the USM Joint Council's Advocacy Day. As you just heard from Ryan, this will be taking place Wednesday, February 18th in Annapolis. Regarding Advocacy Day, CUS has been working since late November alongside partners in CUSIF, USMSC, and the system office to ensure a full and impactful agenda. I look forward to delivering a brief report of the day at the next board meeting. I would again like to thank Vice Chancellor Susan Lawrence and her office for all of her support in pulling this day together. As a matter of process, I was excited to pass along the finalists for the Board of Regents Staff Awards as identified by the CUS Awards Committee. I hope the transition to the new process and the timeline went smoothly for campus presidents as well as the staff, and I look forward to the award ceremony later this year. CUS is also in the process of finalizing the State of Shared Governance survey. This survey will be administered in late February, and I hope to discuss the important results at the June board meeting. Individualized campus-specific reports will be generated and sent to each campus president as well. Moving on to issues affecting staff across the system and related to salary and staff benefits, non-bargain staff across the system are aware of messaging coming out from AFSCME related to bargain staff salary increases that will not apply to them for the third year in a row. This third year of increases stands to further compress wages between subordinates and supervisors, a process which seems to be hurting retention efforts, according to some campus reporting. Beyond this, and as discussed last time, CUS continues to explore the extent to which duplicative fees have been eliminated for campus employees seeking to take advantage of tuition remission, as well as the extent to which campuses have made ombud services available to campus employees. Finally, staff throughout the system have demonstrated growing concern for what is seen as a lack of guidance around what policies and procedures exist concerning potential immigration and customs enforcement actions on their campuses. Staff across the system are eager for more succinct guidance from senior leaders either on their campuses or at the system level. This issue is complicated because we all know that campuses have often made this information available, but perhaps the campus community doesn't know where to look or perhaps wasn't aware of the issue when it was first sent out. This overall issue was brought up at a recent Chancellor's Council meeting, And I know that swift action was already taken at many campuses, with more action to come. I hope that we can continue to improve practices that include staff and decision making, and keep staff informed of changes, and further provide opportunities for staff growth through the system. Chair Gooden, thank you for the time to share these ideas, and this concludes my report.
Are there any questions for Mr. Prouty? Okay, seeing none, thank you for your report, and we'll move on to President Bro for the Council of University System Presidents. President Bro.
Thank you, and good morning, Chair Gooden, Chancellor Perman, Regents, colleagues, and guests. Thank you for the opportunity to provide an update on the work of the Council of University System Presidents. Before I begin, I would like to take a moment just to recognize the extraordinary commitment of our faculty, staff, and students across the University System of Maryland. Our campuses recently braved a significant winter storm, as we all did. And our campuses pivoted and continued moving the semester forward with resilience and determination, and their dedication to teaching, learning, and services, just a reminder of the strength of our institutions and our commitment to deliver on higher education. So thanks to and appreciation to each of the campuses for what you did to get this semester moving on. You have my written report in your materials, and since the last Board of Regents meeting, the Chancellor's Council and Council of University System Presidents met on January 12th and on February 2nd via Zoom. On January 12th, the presidents reviewed and provided input on revisions to the paid family and medical leave and family support policies, as noted in the written report, including the policy on family supports for faculty, policy on family and medical leave for faculty, and the policy on family and medical leave for non-exempt and exempt staff. The presidents received a budget update from Senior Vice Chancellor for Administration and Finance, Ellen Herbst. The Chancellor and Chancellor Perman and Senior Vice Chancellor for Academic and Student Affairs, Allison Wren, discussed the concept of a USM Common application. The presidents also received an update on the Frostburg State University presidential search, and we engaged in a peer exchange. On February 2nd, Coppin State University Provost Shanta Hayward presented on Coppin's No One Goes Hungry initiative. The presidents discussed the potential collective collaboration around that initiative, and there's more to come on that at a later time. The presidents also discussed potential collective bargaining legislation with Vice Chancellor for Legislative Affairs, Susan Lawrence. Senior Vice Chancellor Ellen Herbst and her team provided capital and operating budget updates, and the presidents also reviewed the exempt salary structure biennial review with Associate Vice Chancellor for Human Resources, Dan Shannon, and received guidance from Assistant Attorney General Allison Boyle on Title II digital accessibility and IPEDS reporting. And then finally, Towson University President Mark Ginsburg led a discussion on expressive activities on campuses. This concludes my report, Madam Chair, and thank you.
Thank you, President Bro. Any questions for the president? Seeing none, we'll move to the University System of Maryland Student Council, Mr. Vasquez Reyes. Good morning, Jefferson.
Good morning. Good morning, Chair Gooden, Chancellor Perman, and members of the Board of Regents. Our first meeting of the year took place on February 1st, 2026, and comprised of both the graduate and undergraduate councils. We were joined by Chancellor Perman and had a great discussion about the students' concerns and the state of the system. One of the most common concerns shared by the graduate and undergraduate councils alike was the growing anxiety among student populations about the presence of federal law enforcement on campuses. Our representatives shared meaningful feedback, stories, and information during the discussion. And these concerns were then shared with our institution's presidents at the February's Chancellor's Council meeting, where we discussed how we can continue to inform, support, and protect students at our universities. Our board of directors have been hard at work for the last couple of weeks. During a recent University of Shady Grove Student Council meeting, our Vice President for Undergraduate Affairs, Princess, has been reaching out to our system's RHECs to identify gaps in advocacy and to identify ways to strengthen their voice in our council. Meanwhile, Vice President for Graduate Affairs Harshal has been gathering concerns from graduate students regarding the faculty hiring processes and job allocations at all of our institutions. Our DEI directors recently conducted a full audit of existing Know Your Rights resources at our campuses and have been planning information sessions and an outreach campaign for USMSC director positions to diversify and increase interest from all of our universities. Our government relations directors have been equally active. They're currently participating in state budget discussions, tracking active legislation, and delivering testimony regarding scholarship initiatives. In addition, they have successfully scheduled a meeting with Governor Moore, during which we plan to share how federal changes have impacted our graduate and undergraduate students, and to learn what the Moore-Miller administration plans to do to strengthen public higher education. As of last Friday, the USM Board of Regents Student Excellence Scholarships applications closed. I'm pleased to share that the number, from my understanding, is 289, which I believe is even higher than last year. We are very excited to begin the review process, but we also really look forward to seeing how incredible our system students are. I would like to thank our institution's VPSAs, their staff, and other offices that participated in distributing materials for this scholarship. And most importantly, thank you to Dr. Zakia Lee for her incredible work behind the scenes on managing the application and helping us spread the word. Madam Chair, this concludes my report.
Well, thank you. Any questions for Jefferson?
I have a question, Madam Chair.
Yes, Regent Wood.
Jeff, are you in a position to share with us which of our campuses have had ICE police officers on the campus?
From my understanding, I don't know if I have the position to share that. I do know that most of our university presidents have shared that there has not been any presence so far, and any of them are able to chime in on that if that's true or if it isn't.
Yes, we have had ICE on our campus. Yeah, at UMES.
Bill,
Has the experience been bad at UMES?
The experience, we make sure on a monthly basis that we share with our faculty and staff that our protocol, what our protocol is. And so the experience has been just normal. It was surprising to different individuals, but because we had been sharing that particular perspective, they knew what to do, which is when ICE showed up, they took them to the police station, and then they presented the paperwork of the individuals that they were looking for, and then they moved forward with that. So just a normal experience. It did frighten individuals, though.
They didn't take anybody into custody, though, right?
Yes, they did.
They did?
Yes.
Wow, okay.
Any other questions for Jefferson? Okay, seeing none, we'll move on to the consent agenda. The decisions regarding which items to include on the consent agenda were made by me and the committee chairs. However, any regent may request that an item be removed from the consent agenda for separate review and discussion. Before I move approval of the consent agenda, I ask if there are any items that any region would like removed from the consent agenda for separate review and discussion. I move approval of all of the items on the consent agenda. Do I have a second?
Second.
All in favor?
Aye.
Aye.
Any opposed?
Aye.
Any abstentions? Seeing none, the motion passes. We'll now go to our next order of business. And first up is an update from the Committee on Governance and Compensation. In your materials, you will see a charge document for the policy work group that was launched in December. Regent Stebbins is serving as the chair of this work group and will provide us with information about the group's charge. But before I turn it over, I'd like to remind the board how and why this group was formed. In many ways, this work is overdue. When the system was established in 1989, the world we operate in today was barely even imaginable. While concepts like artificial intelligence existed in name, their practical impact was decades away. There was no modern cybersecurity threat environment, no NIL, no sports media rights, and far fewer regulatory, financial, and reputational complexities facing public higher education. The pace of change has accelerated dramatically. Technology has evolved. Risk profiles have shifted. Expectations of boards, particularly around their duties, oversight, and accountability, have increased. While our policies have served the system well, they have not always kept pace with these changes. That is why the timing of this work is exactly right. As chair, I want to be clear about expectations. This work is not about revisiting any past decisions or second-guessing management. It is about ensuring the board's policies provide clear guidance, appropriate guardrails, and sufficient flexibility to govern effectively in today's environment and in the years ahead. With that information in mind, Regent Stebbins, the floor is yours.
Thank you, Chair Gooden, and good morning, Regents. I'm pleased to share with you the charge document for the newly launched USM Board of Regents Policy Work Group. The charge is to take a thoughtful, disciplined look at our policy framework, both what exists today and what may be missing, and to recommend updates that ensure our policies are clear, contemporary, and aligned with the board's responsibilities and the long-term interests of the system and our institution. The other members of the work group are Regents Blunt, Ganella, Marani, and Smart. Regents Leggett and Wood will serve as advisors to the group. This is a significant undertaking, and we are approaching it deliberately through a phased process. Phase 0, which is where we are now, is the foundation phase. This work group will confirm and update its charge, scope, and membership, and establish the overall approach, timeline, and deliverables. In phase 1, which is the next phase, we will conduct a careful assessment of the current policy landscape and develop a detailed work plan to conduct the scope of work in the next phase, which is phase 2. This phase will review the existing policies and identify opportunities for clarification, alignment, or revision. Phase 3, which is the final phase, will identify emerging areas that are not fully addressed today and develop recommendations for new policies as appropriate. Like our strategic planning efforts, this work group will operate with defined timelines and clear deliverables. Once this initial work is completed, ongoing policy review will become a regular part of the Compensation and Government Committee's responsibilities. I am grateful for the expertise, judgment, and perspective each committee member and advisor brings to this effort. And with that, I'll turn it back over to Chair Gooden for further discussion. Thank you, Madam Chair.
Yes. Are there any questions for Regent Stebbins? Okay, seeing none, we will move on to our next item, which is an update on the Frostburg State University President Search. Before I turn the floor to Regent Smirik and Chancellor Perman, I'd like to review our process. In the fall, Chancellor Perman launched the search with a call for nominations to serve on the search committee. Once the search committee was established, A series of listening sessions were held on campus by both the Chancellor and Regent Smirik, as well as the search firm. The position was advertised nationally, and the search committee conducted its review of applicants. 10 semifinalists were interviewed, and the committee advanced 4 for the board's consideration. The Chancellor and board interviewed the candidates and selected 1 for the office. Today, the board will vote to affirm that selection. Before we vote, Regent Smirik, who chaired the search, and Chancellor Perman will provide an update and announce the candidate. Regent Smirik, over to you.
Thank you so much, Madam Chair. One of the most important responsibilities of this board is the selection of our university presidents. Chair Gooden afforded me the great honor of chairing this search, and for that, I'm very grateful. So thank you, Chair Gooden. This is actually the second presidential search committee I've been on, but the first one that I have had the opportunity to chair. Now, beyond having the chance to play a part in identifying the right leader for this institution, this experience gave me the opportunity to spend some time with that community's most committed leaders. And I just have to say, it's a real pleasure to work alongside a group of individuals who care so much about their school and their region and are willing to work hard in order to find the right leader for the future. Now, as many of you know, Frostburg has a terrific faculty and staff and students with great potential. This is truly an anchor institution, one of the region's largest employers and a vital workforce development pipeline. But it's also a central part of the region's culture and history. And that's one reason why the Frostburg community is so proud of and so invested in this school and everything that's attached to it. Now, as our committee listened to the community and various members of the search process, we heard a consistent message. Yes, of course, they wanted a president who is a respected scholar and a proven organizational leader, especially in higher education. But as importantly, they wanted someone who understands and cares about what we call Mountain Maryland, its values, its culture, its people, someone who would be an engaged member of the campus and the broader regional community. So along those lines, the search firm engaged more than 200 contacts in the search. Of the applications, our committee narrowed the pool down to 10 semifinalists who we all interviewed, and then 4 finalists, which we were able to send along to the board. And I am very pleased to say that we found the right leader for this great institution and this great system. Now, before turning it over to Chancellor Perman to make the official announcement, I just want to express my sincere gratitude to everyone who contributed to this process. For folks who might be listening who don't know too much about the search process, it is an enormous amount of work. People give up their time with their family and the other activities they have so they can engage in this. And so I'm very, very thankful that they were willing to invest that time with this process. The search committee, all of the members were absolutely wonderful. It included regional education leaders, the elected representatives from the faculty senate, staff senate, student government. We had academic and student affairs administrators. Alumni were a big part of the search committee, as were 2 of our former regents who are from the western part of the state, Regents Breslin and Slater. And of course, I want to give a special shout out to my partner, Regent Lewis, who there's no one else I would have enjoyed more working with. She's absolutely terrific along the way. So thank you, Regent Lewis, for all of your work and your leadership in getting us to the finish line here. So just a final word from me. I leave this experience not just convinced that we found the right leader for Frostburg, but also proud of the way that this board and all of our partners went about this work. It was a team effort for sure. And I got to say, it demonstrates so many of the strengths of higher education during these tough times. So thank you, Madam Chair. Chancellor Perman, the floor is yours.
Well, thank you, Regent Smirik. You said it exactly right. I believe we found that leader, a scholar, a visionary, and a mirror reflecting the very qualities that the Frostburg community identified as essential to leadership. Now, before I share the selection, I need to take a moment to express our sincere gratitude to Dr. Darlene Smith for stepping forward. Yes, applaud, please. for stepping forward to serve as interim president. Dr. Smith, you answered the call, bringing steady leadership and a reassuring presence during a very important and difficult transition. And I have to confess here publicly, and I've said this to you before, you made this very difficult for me because the university community consistently asked me, why not you? They hold you in such high regard. The ultimate compliment. So we pulled you out of retirement. You made me promise. You gave me a very hard time, frankly, that we wouldn't keep you before July 1, 2026. So how about that? We delivered. And I know I'm speaking for the entire board, certainly, and the entire set of presidents, the university community. Thank you, Darlene, for your service and your grace and your unwavering commitment to Frostburg State University and this system. And by the way, you're not out of it yet. July 1st is July 1st. So we will enjoy your continued leadership, your continuing to move the institution forward, your collegiality as we wait our new president's arrival on July 1. Now, I'm delighted to share that the Regents selected Dr. Shadow Robinson as the next president of Frostburg State University. Let me tell you about Dr. Robinson. He's a proven academic leader, and he's a proud son of a region that I knew very well in Kentucky when I had the privilege of being the medical school dean at the University of Kentucky. Shadow was born and raised in rural eastern Kentucky, the son of a coal mine engineer and an educator. He understands firsthand the power of education to transform lives in communities like Appalachia and more specifically, Mountain, Maryland. His personal story and his professional mission are rooted in expanding opportunity across Appalachian Highlands. As president currently, as provost currently of the University of Arkansas, Fort Smith, where more than half of students are first generation and Pell eligible. He leads more than 300 faculty and staff and has delivered measurable results that include a record first year retention, a 20% increase in freshman enrollment since 2022, a 30% increase in transfer students, and a $5 million reduction in the university's structural deficit. He's helped drive an $85 million comprehensive campaign to 90% of its goal. He's launched new engineering and healthcare programs aligned with regional workforce needs, and he secured nearly $8 million in competitive state grants. Previously, as dean at the University of Tennessee at Martin, he led workforce initiatives tied to Ford Motors' major manufacturing expansion, and he helped secure funding for an $18 million test hub, an innovation and workforce development center, TEST, designed to power regional economic growth. I hope you're all starting to see the fit here in terms of what we hope for in Western Maryland. Across every role, he has strengthened enrollment, advanced student success, aligned academic programs with industry demand, secured critical funding, and very importantly, built deep community partnerships. He brings, in our view, not only the resume Frostburg State needs, but clearly the lived experience, the Appalachian commitment that makes him uniquely prepared to lead and serve Mountain Maryland. A few more comments. Dr. Robinson is, and you know that this brings me great joy, the poster child for experiencing college early and in high school. He began taking classes at the University of Kentucky at just 14 when he was in high school. And then he enrolled full-time as a university student at 16. He went on to earn 2 bachelor's degrees, one in physics and astronomy, and the other in mathematics, before completing his doctoral degree in theoretical nuclear physics at Rutgers University. As I indicated, his appointment will begin on July 1. He's a fun guy to talk to. He'll fit in well with the group. And I look forward to everyone that hasn't had a chance yet meeting him. Madam Chair.
Thank you, Chancellor. And thank you, Regent Smearick. I first want to congratulate the Frostburg State Search Committee, Regent Smearick and Regent Lewis, on their work to recruit and bring forward a highly talented pool for the board to consider. We said we generally prefer 3 candidates, but they brought us 4, and we understood once we talked to them because there were no bad candidates. They were all excellent candidates. Dr. Robinson is a remarkable candidate. It is now my distinction to call the vote. I move that the board affirm its selection of Dr. Shadow Robinson as the next president of Frostburg University. Do I have a second?
Second.
All in favor?
Aye.
Any opposed? Any abstentions? Hearing none, the motion passes. I would be remiss if I didn't also join the Chancellor in thanking Darlene Smith for her steadfast leadership during this complex time at Frostburg. Even though we couldn't convince you to stay, you will always hold a special place in our hearts for everything you did for the folks up in Frostburg and for making it so easy to recruit the right person into this role. Thank you on behalf of the board. And let's give her another round of applause.
Thank you.
You're not done, Darlene.
I'm aware, sir, and I look forward to the next 4.5 months working with my Bobcat community.
So this brings us to the close of today's meeting. Before I close, I want to wish everyone a happy Black History Month. May this month inspire continued learning, meaningful dialogue, and action that honors the past while shaping a more inclusive future. The Open Meetings Act permits public bodies to close their meetings to the public in circumstances outlined in 3-305 of the Act, and to carry out administrative functions exempted by 3-103 of the Act. The Board of Regents will now vote to reconvene in closed session. The agenda for the public meeting today includes a written statement with a citation of the legal authority and reasons for closing the meeting, and a listing of the topics to be discussed. The statement has been provided to the Regents, and it is posted on the USM's website. Do I have a motion to move to close?
So moved.
Second,
Second.
Second.
all in favor?
Aye.
Aye.
We will now take a 10-minute break, and so let's reconvene at 10:20